Hello everyone, welcome to TradeVersity Online Trading Academy. This is Dynamic FX. Happy New Year, Happy New Month. I apologize, it's been quite a while that I posted a video on YouTube that is about to change this year. Permit me to say this. I want to give glory to God for keeping me alive to this time. I want to let you know, if you're out there, if you're listening to my voice, that He loves you dearly. Alright, that being said, don't forget to hit the subscribe button and the notification bell so you get notified every time I post a new video. Don't also forget to give us a thumbs up if you like our videos, if you enjoy the content. Okay, part of what I've done, I spent a lot of time doing last year, was just to perfect the institutional trading strategy. The results have been phenomenal. My trading has become more stable, and the results too have also been very encouraging. So I want to encourage most of our traders out there, don't be like the 99%. All right, don't just focus on the charts. You need to also study the trading patterns of the people that actually move price. Those are the guys, the big institutions that are responsible for moving price. A lot of the works that we've done on our website for the COT data, most of it, of course, we got some of the ideas from, or most of the ideas from Larry Williams' book. So I would encourage you to go and get Larry Williams' book on. He's a great author of on the COT report if you need to understand it better. Okay, but for some of us that are new to the concept, this is the primary source where we get the data from. Is gotten from the CFTC, the Commodity Futures Trading Commission. Okay, is a report issued by that the US has mandated that it be published, so for the purpose of transparency. So what they do is to publish the positions of big institutions, big banks, big hedge funds, asset managers, portfolio managers. Okay, and for you to be able to see what their position is in those assets that you trade in. Okay, so this is the website, is cftc.gov. If you want to learn more about it, you can head over. I'll be doing more videos on the C's, understanding the COT report, and I'll also be giving you a guide on how to use the tool that we have provided on our website. It's not like most of what you find online outside there. Okay, so we've made this available. So but my focus today will just be on gold. My strategy is simple. What I like to do before I trade first is to identify where price is on the chart. Okay, looking at gold, we've had this rally last week. I'm going to show you the reason why that is the case. What you also need to know is that these hedge funds, they've devised a way to always move against the retail traders. So you don't want to be trading against these guys, against the hedge funds. You want to try and follow in their own trading pattern, and you will notice that you'll be right most of the time. Okay, because they have all the data, they have access to good information about the market. All right, so what I like to do first is go to the monthly and try to identify the range of the previous month's candle. So looking at this candle, we have the candle for January 2020. Okay, so I can get that accurately. What I do, yes, good. Chart settings, this is what I want to do. This is not what I need. Okay, I need this. Okay, good. Yes, so let me get the accurate the high of this candle would be 1611.498. That was the highest we were last month. That's 1611.498. So we'll come right here. That's 16. Okay, I can see that. So the coordinates will be 1611.498. Say okay, good. And the low, to get that accurately, that'll be 1517.111. all right, now we have that set up. Good. So move down to the daily. Good. So this was the move we had last month. We had a rally from this point up onto this point. So we're approaching that zone, okay, that area, that huge supply where we had this previous rejection. So we need to be mindful about that. So once I'm done doing this, what I now do is to head over to um, and try to understand where the sentiment is. Okay, so I just come here, then of course select the instrument here. Okay, one beautiful thing that we've also done on the site, you can adjust the year. You can just adjust the year that you want to see. I prefer just looking at 1 year. Okay, so what I just did was to adjust the year. You get a lot of information for on these sites that will help you improve your trading drastically. All right. Okay. So let me take it back to 1 year. So look at 2018 to 2020. It becomes a bit clumsy when you increase the years. Okay, we have almost from 1996 to 2020, so that will help. So looking at gold, what we saw last week, we of course we saw that rally, and I can tell you why. If you look at, yes, just looking at the net positions of traders, you know what the net position is, just basically the difference between the longs and the shorts to try to see where more of the contracts are. So in this particular case, if we say net long, that means you have more long contracts than short contracts. Well, I won't start going to the basics. If you want to learn more about it, I think I will do more videos just to try and explain so you can follow easily. So let me stay on the analysis for today. So in this particular instance, we have the non-commercials, which are like the hedge funds, speculative participants. Okay, the speculative markets, they're represented by this I don't know what color this is, but fine, some sort of red violet line. Okay, or velvet, sorry. Okay, then this pink line here, then the blue line represents the commercial, the pink line represents the non-reportables, where they're like the retail traders, you and I. Okay, they are just like a proxy for you and I in the market. All right, so looking at it, this position, you may not really know what you can tell. There is the hedge funds are net long, the commercials are net short, retail traders just somewhere above zero. But if you look at the index, this index helps to rank these net positions from the scale of 0 to 100. So when we have positions that rank between 80 to 100, we'll say they're bullish. And if you have net positions that rank between 0 to 20%, we will say they are bearish. Okay, this index tool helps you to identify extreme levels quickly. So from what we saw from the 31st, we can see that the non-commercial, the non-reportables, the retail traders started shorting they started shorting gold. Okay, which is obviously what the 99% would normally do when they see a rise in price like that. Okay, in some particular cases, yes, they might have gotten that right, but that presents an opportunity for the big guys to be able to move price against the 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 retail traders. Okay, so let's see that. Okay, looking at that started between 31st of December 2019 till date. So you can see. So if they were the 31st of December would have been from here. Okay, imagine they've been trying to call this short since here. Okay, and see how price still ended up moving. That's an okay, 31st of December should be somewhere here. Okay, this is why 99% of traders fail. All right, so they've been trying to short the they only got maybe anybody that would have maybe has a big account would have been able to withstand. Maybe it just ended up being right somewhere around here. Okay, so you can see from this whole area, the retail traders have been trying to short gold for a long time, but guess who's moving price against them? We can see that we can see clearly that it's the non-commercials just stayed their course, just still bullish on gold. All right. So this, just looking at this indicator alone can also already tell you a lot. So we can even see from the trend for the non-commercials is they're extremely bullish. We don't really look at the commercials. Then what happened? Yes, even though the non-reportables are bullish, but they were also still more. They were reducing their long positions, telling you that okay, they are bearish on gold. They want to short gold. All right. I'll be telling you more about this indicator, but just know for the average commercial to open interest, when we have readings above 80%, that represents a buy. When we have readings below 20% to 0%, that will represent a huge sell. If we back this looking at August 20th 2019, if we go back to the charts, we can see how that played out. August should be somewhere around here. I hope I'm correct. Yes, here. So that's the power of that indicator. That's 20th. Yep. So you started seeing selling pressure here, and look at how price moved from that distance down. Okay. So price moved from here down. All right. So is a great indicator to look at. So our analysis looking at price action, or what we can see, we're approaching that level where our price got rejected at that level, and you can also see that okay, let me show you something. The percentage change is also something I like to always look at. So if I look at let me bring this up. Let's see if this will give you an insight. Did I have that here? Okay, yes, I have this trend table here. Yes, I have this trend table here. Okay, looking at this trend table of that focuses on the sentiments also. Let me try and enlarge this. Interesting stuff, really. I just said let me put it out there. So for gold, what we know is that they're still very bullish. If you look at the commercials in terms of I looked at what we can see here. We have this blue line representing the net positions. Then we have this I don't know what to call it, velvet line represents the 13 weeks moving average of that net position. Then we have the 52 weeks net position of moving average on the net position also. Then we have the long term 56 weeks. So clearly the trend in terms of sentiments is still very bullish. Okay, and you can see retail traders here still trying to short gold from there, which presents an opportunity for hedge funds to move against traders. Okay, so but we still need to be careful. For me, at this level here, I would need to be mindful of this whole area here. So we're approaching the best. What I would have recommended would be definitely to see price break above 1611 and retest that level before. So let me put that here. So what I want to see is this, and before we start heading higher. Okay, but my concern is still that the fact that this market is still overextended, and there's a possibility we could see it get rejected here, then drop back down. All right, so we'll watch how that plays out in the coming week. So overall, the trend for gold is still bullish, but we could see price get rejected at that level and see price fall. Okay. Or alternatively, you see price break above a 1611.498 level, then we could see price push up to the upside. So thank you. I didn't intend to make this video this long. I'm going to be doing a video more on how to use what we have on the website here. Please take a shot at it. If you have any question, you can send me an email at info@tradeversity.com, or you can chat me up on Telegram or on Twitter, on Facebook. Just leave me a message or a comment on this video. So I hope what I've said made some sense. I know this might be a little bit overwhelming, maybe it's also something you're not used to, but this is what is going on, and you can see this is why traders lose money. You can see that divergence in opinion in buyers in the market, and most retail traders end up losing money. All right, so I'll be showing more videos of this in time to come. So thank you.